Yo, what's up, everybody? It is Tuesday, September 9th, and we just had one of these summertime Florida deluges. If you could listen in the background, it's like frogs and birds. Whenever it rains really, really hard, you hear that? I mean, it's sometimes that noise is deafening. It's unbelievable. So, not a lot going on. We had new highs in the NASDAQ today. Tomorrow we'll get producer price index, Thursday CPI. So that has the potential to kick up some volatility, but I really don't pay attention to these things. For me, inflation just means a redistribution in income in the economy. It goes to different sectors. So my job is just to figure out what sector, and that's pretty easy because inflation is a transfer of income from consumers to producers. So you kind of just strategize in that way. Same thing with rate adjustments. As I've always said to you guys, if you understand what rate adjustments are, price adjustments, plus they're also fiscal operations. I mean, so it's like everybody, all these monetarists, they're like so intensely focused on this and what's the Fed gonna do, what's Powell gonna say, what this and that, and I don't pay any attention to that stuff. One piece of news that did come out late in the day was, again, this really big downward revision in job creation for, I think it was like, through March of 2025 down. They had it revised down. The Bureau of Labor Statistics had to revise down the number of jobs by like 911,000, almost a million jobs. So, but again, I don't pay attention to this stuff because that's legacy data. That's old news to me. And so what? I mean, for me, it's about the income in the economy, and that is driven by the fiscal flows, and that is going to creates the conditions that we run on going forward. And the whole game is to understand what conditions are going to be like as we go forward, not, what they were in the first 3 months of this year. That's gone. That's over. So, I mean, it's all about income. Like I said, with the inflation, I don't get all crazy about inflation because all it is a redistribution of income to different sectors in the economy. That's it. Anyway, stocks are a good hedge against inflation, but you have to know where to position, which I do. So I don't pay any attention to this stuff. Again, the analogy I've used recently is I focus on my instruments. What are my instruments? Those are the fiscal flows. That's the transfer of income to the economy. Now, if Trump's, vision comes to pass, if it comes to fruition where he's able to, as a result of the tariffs, cause the foreign sector to be the net spender or the net investor here in the United States, if more and more income is going to be transferred from the foreign sector, or another way to say this is to remain here as opposed to being transferred to the foreign sector, then I'll pay more attention to that. I think that's a possibility. We've seen a narrowing in the U.S. trade deficit, but for now, my framework has not changed. I mentioned that I have started to look more closely now at bank credit because that may be a tip-off to higher levels of private domestic investment. And bank credit is good, but remember, it's good for the banks because they're the ones, banks give you credit which means you get a deposit in your checking account, but now you have a debt that you have to repay, and you have to repay that to the banks. Bank stocks are an excellent way to play this right now, because they're going to be the ones scooping up all that money. Okay, it's going to flow to them. So, and not only that, banks they're holding a record position in Treasury securities. So when the Fed starts to cut interest rates, what's that mean? It means bank capital is going to increase, which raises the value of these stocks. And it also means that bank earnings are going to shoot up, because they're going to report higher earnings from their trading operations. They're all long. They're all heavily into treasuries. So banks, the big banks, JP Morgan, Citi, Wells Fargo, Bank of America, Capital One Financial, Ally, the big banks. I mean, I'm loaded up. I've been loaded up on those things for years. And every time we've had a stock market correction and those stocks get beaten down, I've been a buyer. You know, I hold JP Morgan at levels like under $100. And every single pullback in that thing, was it now like almost $300 or something like that? I haven't looked recently. But yeah, that's a great way to play it. A great way to play it. And by the way, it might also be a great way to play gold on the short side if what I said yesterday happens, and I believe it will play out the way I told you, that rate cuts. See, everybody's piling into gold right now on the anticipation of rate cuts. It's late in the game. And by that, I don't mean to say, this is like going to be the forever top in gold, because nominal prices of everything, they rise over time. But I'm just saying, like, the rate cuts now, if the Fed resumes these rate cuts, it could put an important top in place in gold. I'm the only one telling you this right now. So, I mean, you don't even have to remember that I'm telling you this, because I'm going to come back to this. I'm going to come back to this. And I feel so confident that I'm going to be right in this, because I understand the relationship, or not so much the relationship, but I understand what interest rate changes, what they actually are and what they do, where most people just think, cut rates, that's inflationary. I mean, that's so ridiculous, and so like such an amateurish view, like really lacking in understanding. I will be back to remind you that I made this prediction. Believe me. Anyway, there's not a lot to talk about today. Tomorrow we get these numbers. Let me also remind you that next Monday is a quarterly tax drain. This is the seasonally weak period normally for the market. We got a tax drain coming up on September 15th. We got another one coming up on October 15th. Then we get right back into the bullish cycle again, which is a November quarterly interest payment and all that stuff. The thing we're waiting on to see is what the Supreme Court will decide with respect to the tariffs. Most likely they're going to rule, I think they're going to rule in favor of the tariffs, in favor of Trump. But we'll see. And all of the hyperventilating and concern about the government might have to refund all the tariff, I find that to be funny, because I don't know anyone who doesn't like a tax refund. And that's exactly what it would equate to. If the government has to give back that money, which it sucked into its own account at the Fed, literally drained it out of the economy, but now it has to put it back in, I don't see how anyone can construe that as a negative. And it's not. It's absolutely not. But it's being portrayed like that as, this is going to be such a burden on the government, which is nonsense. There is no burden on the government to credit a bank account, to spend, for the Treasury to direct the Fed to credit somebody's bank account. It's all just a keystroke on a computer. So that's not a problem. And if the the tariffs indeed have to be refunded, that's like having a gigantic tax refund, like the kind we usually get in February, right back into the economy again. So that is not a bad thing. So when I read this stuff and when I hear people saying this, I just laugh. I get a kick out of it. It's like, folks, there's so many times when, I mean, the only analogy I can use is they're literally handing you their money and begging you to take it. And when you think about it, it's your duty to do that, because, you know, you have to, it's the most effective way to wipe out stupidity, is just when they're handing you their money, just take it. Just take it. Anyway, that's it for today. Thank you for watching. Please like this video and subscribe to this channel. We're going for 20,000. It'll take me another 16 years. Hopefully not. Actually, the run-up, when I asked you guys, you really came through. Because I remember when I was like at 9,000, not even at 9,000, maybe like 89, 90 or something, and I started to pitch to you guys saying, help me out here. We got to 10,000 real fast. So that was cool. So let's do it again. Let's keep it going. And don't forget, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial to MMT Trader. And one more time, just listen to the critters. Nice, right? All right, bye.